Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden within corporate filings. Today we're diving into something a little spicy, a report that shows a digital asset trust is making some quick adjustments. What could possibly be going on when a trust that tracks something as volatile as crypto suddenly announces big changes to its tracking mechanism? This isn't your typical quarterly earnings report. This is a Form 8K, which is basically a filing for, oh boy, something important just happened events. And for the Grayscale Solana Trust ETF, which trades under the ticker GESL, something important did happen. It involves the way they measure the value of Solana, their underlying digital asset. So here's the deal. The Grayscale Solana Trust ETF doesn't directly hold Solana. Instead, it aims to track the price of Solana. To do this, it relies on something called an index. Think of an index as a recipe that tells you how to calculate a price. This particular recipe is from CoinDesk Indices Incorporated, and it is called the CoinDesk Sol CCI 6-bar reference rate. Now, the key event here is that on the 18th of November, the company that creates this index decided to kick one of the ingredients out. They removed a platform called ITBIT, specifically for its US dollar trading pair of Solana. Why? Because ITBIT apparently stopped meeting the rules that CoinDesk has for being a part of this price calculation. So, one piece of the puzzle for calculating the Solana price is gone. They didn't add any new platforms during their usual checkup. So, the list of places where they now look to figure out Solana's price has shrunk. It is like trying to get a consensus from your friends on where to eat. But one friend suddenly stops answering your calls. You have to rely on the remaining friends. For the US dollar trading pairs, the index now includes Bitfinex, Bitstamp, Bullish, Crypto.com, Gemini, Kraken LMAX Digital, and OKX. These are all digital asset exchanges where people buy and sell Solana for US dollars. They also look at Solana traded against US dollar coin, which is another type of digital currency. Those pairs include Bitstamp, Bullish, Bybit, Kraken, and OKX. What is really important to understand is that this isn't a one-time thing. The people who create the index can change these trading platforms, or even how they calculate the price whenever they want. They have these monthly reviews where they can add or remove places based on their criteria. This means the way the Grayscale Solana Trust ETF tracks Solana could keep shifting, which adds a layer of unpredictability. Interestingly, the filing also mentions that Grayscale Solana Trust ETF is an emerging growth company. This usually means they are a newer company and are allowed some flexibility in reporting rules. They've also chosen to opt out of extended transition periods for new accounting standards. This essentially means they're choosing to follow the latest accounting rules right away, rather than waiting for a grace period. Now, I know you're all curious about the nitty-gritty financial tables, but this filing is a bit different. It's an 8K, which is for specific events, not a detailed financial report like a 10Q or 10K. So there aren't big tables of revenue, profit, and loss to dissect here. The main story is the operational change in how the trust is tracking its underlying asset. This report is signed by Grayscale Investment Sponsors Incorporated as the sponsor of the trust. It is Edward McGee, the Chief Financial Officer, who has signed off on this. He is signing in his role as an officer of the company sponsoring this trust, not directly as an officer of the trust itself, which is structured as a trust. Alright, let's break down what this all means. The Grayscale Solana Trust ETF's reason for existence is to give investors a way to gain exposure to Solana's price movements without actually having to buy, hold, or manage Solana directly. They rely on an index for this. When that index changes its components, it's like changing the ingredients in a cake recipe. If you change too many ingredients or swap out a key ingredient for something else, the cake might not taste the same. The removal of ITBIT shows that the index provider is actively monitoring its constituents. This is good in the sense that they are trying to maintain the integrity of their index. However, it also highlights the inherent volatility and potential instability in the digital asset trading landscape. Exchanges can come and go, or fail to meet certain standards, which can directly impact how a related financial product functions for investors in the Grayscale Solana Trust ETF. This means they need to be aware that the underlying mechanism for tracking Solana can change. While the trust aims for accuracy, these adjustments could theoretically lead to slight deviations from Solana's actual market price, though the impact might be minimal if the other exchanges are robust and liquid. The key takeaway here is that the digital asset space is still evolving rapidly, and financial products built around it will likely continue to see operational adjustments. It's a constant game of keeping up with a fast-moving environment. Looking at the broader picture, this filing underscores the importance of due diligence for anyone investing in cryptocurrency-related trusts or ETFs. You are not just betting on the price of a digital asset, you are also relying on the stability and methodology of the financial products designed to track it. The fact that Grayscale is an emerging growth company suggests a willingness to adapt, but also perhaps a less entrenched operational history. The decision to follow newer accounting standards faster is likely a move to build trust and demonstrate transparency. One of the biggest risks here is the potential for increased tracking error. If the index provider continues to make frequent changes, or if the remaining exchanges face issues, the ETF might not perfectly mirror Solana's price. This is a constant challenge in the digital asset world. On the flip side, the opportunity lies in the potential growth of Solana itself. If Solana continues to gain traction and its price increases, then the Grayscale Solana Trust ETF, despite these operational shifts, could still be a profitable investment. The company seems committed to maintaining a functional trust, evidenced by these corrective actions. In conclusion, this 8K filing is less about dramatic financial performance and more about the nuts and bolts of how a digital asset trust operates. The change in the index provider's constituents is a reminder that the cryptocurrency ecosystem is still maturing, and the financial instruments built around it must be adaptable. For investors, it reinforces the need to understand not just the underlying asset, but also the mechanics and potential risks of the investment vehicle itself. Alright, that is our breakdown of the Grayscale Solana Trust ETF's recent filing. What is your take on these adjustments to the index and what they signal for the future of crypto trusts? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for more discussions. Thanks for watching. See you next time.